Good morning. Don Palayo here. It's July 1st, 2025. Welcome to July. Um, Tuesday. This will be a short week for me. We close our office Thursday at noon, and we're off on Friday. So, looking forward to this short week. I wanted to talk a little bit about life insurance. I began a little bit, touched on this conversation in my last video. Want to get a little bit more into detail about this. As I said before, I've found that a lot of people tend to tune out when people start talking about life insurance, but I think it is something very important, especially if for those having families. Now, if you're single, don't have any kids, you probably don't need life insurance. But if you have children and you probably do need to have some life insurance, especially if you have young kids and um, you know in terms of who's going to be taking care of the kids if something were to happen to you. I know it's something a lot of people don't like to think about, but things happen. It's like they happen every day. People unexpectedly pass away for random reasons. Um, if you've ever listened to Dave Ramsey, he will tell you to just get term life insurance. You've probably heard of term life insurance. Term life insurance is where most people start because term life has the lowest premiums. You're not That's the cheapest form of insurance. With term insurance, you are paying solely for the pure cost of the risk. So, for example, with term life, they typically come in certain time frames, so which is the term. So, for example, you can have a 10-year term policy. You can have a term policy that lasts 20 years. The longest ones that I've seen last for 30 years. Um, the company I work for, now this is for level premiums. This is for where these are policies where the premium stays the same throughout that term. There are term policies, for example, ones that we have, which we call Term 80, which lasts till 80, but the premium goes up a little bit each year. So you see that premium year after year go up just a little bit, but you're insured. The thought being that you'll make more money, as time goes on, and of course, inflation and everything is going up. So by the time you get to those older ages, it's not really as much as it looks like if you look at the insurance illustration. An illustration just shows what the planned premiums would be, and over the course of that policy. Say you're 30 years old and you took out a term 80 policy. Well, right now the premium may only be $1,000 a year. Um, but at age 60, it could be $10,000 a year, which that looks like a lot, but that's 30 years from now. So, you know, but it's just something to consider. I have a term life insurance policy on myself. I've had it for a while. I'm actually thinking about getting some more insurance because I had a 20-year term policy that I took out when my youngest daughter was born, and she's 13, so I've only got about 7 years left on that. So I need to get some more life insurance, and I'm getting ready to turn 49. So the earlier you get it, the cheaper the premiums are. So I need to be looking at that. I'm kind of debating, how much. I've been running some illustrations on myself. Um, you know, once I pay this last credit card thing off that I'm working on, it'll probably be something that I do. I'm already kind of earmarking some of the money that I'll be able to start saving. I have a couple expenses that are going to come out of that. I'm going to start putting some money towards my student loan. I want to get a new gym membership here across the street, so I've got to start getting in the gym a little bit more. I've lost a lot of weight, but I've lost some muscle as well, along with the fat. I lost more fat than muscle, but still, I need to rebuild. I've noticed my back hurts a little bit more. I think I think it's just muscle loss. Um, and so I got to get back in the gym. I need to build my legs up. My legs are skinny. I've got chicken legs. I got to get in and start building up my especially if I want to do the Camino de Santiago later on. Need to have strong legs and a strong back just to to be able to handle that. So I'm gonna start really trying to work out more once I have all this credit card done. So the gym membership is not much. The student loan will take some of that, and then I want to get. I'm thinking about getting a 30-year term policy because that would take me close to 80. And I'm considering doing like $1 million policy. Um, my only concern in doing that is that $1 million 30-year term policy is going to be, a chunk of change. And would I be better off at just investing that money? Um, I'm not real sure. I want to leave my daughters. I want to leave my daughters some wealth. I want to leave them something when I die. I want to leave them something. And that would be a portion of it would be the life insurance, and then I want to have some investments and things to leave for them. I think about all this a lot, to be honest. I do. I think about it a lot. I'm like, how do I? It's not even so much about my retirement. It's like, I mean, I can keep my living expenses very low just so that I can build more for my daughters because I feel like they're going to need it. I feel like the way that things are going right now, it's like they're going to need it. So, so I'm trying to. I want to help them as much as I can. Anyway, so that's something I'm kind of working through. Um, I So anyway, term life again is the lowest premiums. Dave Ramsey typically recommends he does not like permanent insurance that much. He's if you ever listen to him talk, he prefers you get term. Um, During the time when you've got especially children that are dependent upon you, have term life insurance in place just in case something happens. In fact, I mean, he would probably tell me that I don't even really need to get new insurance because by the time this term policy ends, my daughter will be in college, and there won't be as much need from them for anything from me, but I want to leave them some money, so I'm going to get another term policy at least to last at least another 20 years. Just in case something happens, we're not guaranteed tomorrow. I just would like to be able to leave them some money to be able to, and hopefully over the course of the next 15 years, I can build some wealth. And in terms of investments, get my investment accounts larger that I can leave behind for them. Um, the next most common policy after term is something called whole life. Whole life is it is permanent insurance. Probably the biggest difference between whole life insurance and term. First of all, the premiums are higher. You're paying more for a whole life policy. But the good thing is that the whole life it builds cash value. Uh, with a term policy, there's no cash value being built. Once you reach the end of that policy, it just ends. You don't have anything to show for it. With a whole life policy, it's building cash value inside of it. So a portion of your premium goes into like a savings account. And it earns interest, and our policies pay dividends. And so uh, over the course of time, it can build a substantial cash value inside of those policies. Um, with whole life, I think there's a couple of good scenarios where it can make sense. I've noticed that some of our clients will take out whole life insurance on their children when they're born, and so they'll pay the premiums on those life insurance policies until their kids reach adulthood and begin working themselves, and then they'll transfer ownership of that policy to the child. So the child has that policy, and they've already got a substantial amount of cash value built up inside those policies. The good thing about that is that you can borrow out of that cash value. Say, for example, that child who's had that whole life insurance policy since they were born, they're looking to buy their first home. Well, they could very well have enough cash value inside that life insurance policy to borrow it and put towards a first time home purchase. Use it for a deposit on their, a down payment on their home. Um, Now, though you are borrowing out of that policy and you have to pay that loan off with interest. It will accrue interest. Um, so you have to watch that, the person that sells you the policy, they can give you an illustration showing how the policy is going to perform after taking that loan if you don't make the interest payments, because it could be earning enough in terms of dividends or interest to pay to where that loan doesn't get too out of hand. um, but you know so those are options there. But if you were to pass away and you have a loan, of course the death benefit would be reduced by whatever loan you have out on the policy. um, so the whole life, I think, is good for in that it can be good in that situation. If you have children, you want to take it because the premiums are pretty low at that point for a new kid, for a child. Um, the other situation where whole life insurance can be something useful is for the affluent among us. Your more affluent people tend to have more of these whole life policies. Of course, the very affluent, the rich, sometimes they have to face things called estate taxes. When they die, they have that. There is an exclusion of like 13, 14 million. In terms of the estate tax. So typically, the first 13, 14 million of your wealth, you don't have to pay estate tax, but anything over that, and you're going to have an estate tax obligation. So what some of these wealthier people do is they'll take out have a whole life insurance policy that will basically be there to pay the tax bill later on. And so so many of them will use it for that reason. um, so those are a couple of situations where you might want to use whole life. I think for the average person, Dave Ramsey's right, that term life is probably the best scenario for most people, especially if you're paycheck to paycheck. If you don't have a lot of extra disposable income, I think term is probably the way to go. Um, Now, there are a couple of other types of permanent life insurance. You may have heard of universal life insurance, and then there's something called variable universal life insurance. Um, these policies are permanent policies, just like whole life. They both have cash value that builds up inside of them. The cash value in the universal policy earns interest, and also the life insurance company, it's earning at a rate based upon how well the life insurance company is managing their cash fund, their investments, their investment portfolios. Also, um, they have the universal life has flexible premiums, so some people want to be able to like pay the premium for a while, pay a higher premium for a while, stop making premiums for a period of time and then later on come back and pay premiums again. Universal life, you can potentially do that. You'll have to run illustrations to see how it would perform and everything. But the the premiums, term life and whole life, you're typically paying that premium, the same premium, no matter what. The universal life, premiums can be flexible. Um, Variable universal life, much the same way. The one difference with variable universal life is that the cash value that the policy is building, you have investment options, kind of like your 401k. You got investment options in there that you can select from. And so some people like variable universal life because, they have life insurance, but they also have an investment product where they're able to build those cash values perhaps even a little bit faster. You're taking on a little bit more risk with it, in terms of investment risk, but typically over time, those investments will grow and they will see, a higher rate of return on that cash value. So those premiums are pretty expensive on some of those products. Just to be kind of FYI, whole life can get pretty expensive. Universal and variable universal life are expensive too. Um, it really kind of depends on the individual and their situation. People that have more disposable income, it may be something they'll want to look at. Um, it may make more sense to just invest, but I know my company looks at it as the insurance piece is you're basically playing defense. It's the defensive side of the ball. Investments are more of the offensive side of so you want to play you want to play well on both sides. You want to have your defenses, you want to have a good defense, you want to have a good offense. So insurance is kind of the defense. For people that are that have limited resources, I would say term life would be the way to go. You can get a $500,000 life insurance. I took out a $500,000 life insurance policy on myself. I guess I was about, let's see, how old was I? This was 2012, so I was about 36 or so, 37 when I took that policy out. Um, and it's only $50 a month for $500,000 term life insurance policy. And I wasn't in the best. I was when I took that policy out, I was heavy, had an extra weight. So the better your health, your better you are health wise, the cheaper those premiums are going to be typically. Um, so that's kind of the way that works. Um, so the term has pretty reasonable insurance premiums. The whole life gets a little bit more expensive. Universal and variable universal policies are a little bit more expensive. Um, I wouldn't look at the permanent insurance unless you have a good amount of disposable income. You're really, making a good living, um, and you want to kind of build for kind of a legacy type asset. You're looking to build something that, to build some substantial cash value. You want to have something left over. You don't want to just put premiums into something and not have anything to show for it, 20, 30 years down the road. That's when you want to start looking at, potentially looking at those products. But if you're just looking to have an insurance product that just in case something happens to you, you don't want your family to be in a bad situation. If something were to happen to you, use term. I think term is a perfectly good product for that. It alleviates a lot of worry. Right now, if I were to pass away, each of my um, each of my daughters would get $250,000. That would be the money would be there for them to get them. My oldest daughter, maybe help get her through college. Get my youngest daughter through college. Help her mother. You know, pay for her cost of living and everything. Right now I pay child support, so if I die, the child support would go away. This life insurance would help pay bills and everything, make up that lost child support. But it's not even so much about that for me. It's just I want to leave my daughters some money that they can use to help them get started in life. There might be enough money there to help them with a down payment on a house, maybe put a substantial down payment on a house. Or get them through school, or some way I want to leave them a benefit. So these are kind of the basic, I kind of got into basic differences between these life insurance policies. If you have any questions, further questions about it, feel free to put a comment. I do read the comments. I'll try to answer it as best as I can. Um, it's hard again for me to get into any kind of specifics for someone's specific and personal financial situation, because without really knowing details about people's situations, I can't really give in terms of any advice or anything like that. I'm also, I can give some basic, core explain products to people and tell them what the differences are, but I can't really give any advice in terms of, your specific situation, how you should deal with it. So anyway, please leave a comment, like, and subscribe, and I'm going to get ready to get my day started. I'm ready to get through this work week and have a long weekend. So we're working toward the weekend again. Anyway, this is Don Pelayo checking out.